Good morning, traders. Welcome to the live stream. My name is Charles. Today we are going to talk about the ES, the NQ, and how they move through the two-way auction process. I'm going to do my best to guide you guys as to what to expect in the minutes, hours, and days ahead in the market, and see if we can't make sense of the randomness that we are experiencing together. A little bit later on today, I want to do kind of a deep dive talking about yesterday's market. All right, the market is open. I want to do a deep dive talking about yesterday's market and everything that happened, because I think there was a lot of really interesting nuances to carry away from the way things played out yesterday. But to start with, since the market just opened, let's just focus on what's going to happen today. Let me give you my run through. Well, in my mind, there's one of two things that is likely to take place today. Either we are going to start with a gap and go, which would mean the market just immediately starts to move higher today. Okay. If that happens, if we, let's say for the first half an hour or the first hour of the day, if the market is creating momentum up, later on in the day, it will likely come down to fill the gap. Once it gets inside yesterday's range, it'll likely find support and we'll just have a sideways day. So that is if the market opens and immediately starts to move higher. Okay. If not, if we start to fill the gap, which is the most likely scenario, that the market tries to come back down and get to yesterday's high, how far down it goes will tell us what to expect moving forward. If we only partially fill the gap and then we find support and turn around and start heading higher, that is very, very bullish. Okay. And it means we are likely heading at the very least up to 64.75. Monitoring for continuation higher from there. If the market fills the gap, if it gets all the way into yesterday's range, we're looking for it to find support right at the upper end of yesterday's range. So basically where you see this overnight low, if they can find support anywhere above that overnight low, again, it is bullish to turn around and start heading higher. But if we start to spend time and bring in volume below 64.25, that increases the odds that we're going lower today. So there's really only one of, several things that could happen. We partially fill the gap and we start the momentum up, in which case, that tells us probably later in the day, we're going to come back down, or we fill the gap, start the momentum up, in which case we could trend higher all day and close near the highs. Or, the third scenario would be filling the gap, getting new selling inside yesterday's range, which implies we need to pull back inside yesterday's range. Now, I don't think that third one is going to happen. I don't think we're going to have a deep pullback into yesterday's range today, but it is certainly still a possibility. So just really quickly, one time, I want to walk you through what that will look like in case it's happening, so you'll know what to expect. But this is not my prediction for what will happen today. So let's say the market gets below that overnight low, we start to get resistance, we start to spend time, we start to bring in volume. The first target to the downside is for the market to head down to 64.15. All it really needs to do is pass through that level, and then that might be it for the day. That might be all the selling. If it is not, if we pass through that level and we still get more resistance and we still get more selling, then the target is to get to the next week reference at 63.88. Same story there. Passing through that might reverse us back up and out of there. If it doesn't, we look to repair the poor low. So it's a pretty clean move to the downside if we get that new selling inside yesterday's range. First week reference, we reverse. If not, next week reference, we reverse. If not, next week reference. Okay, and a lot of money to be made on the way down. Okay, so I'm just pointing that out as a potential scenario, a thing that could happen today. But in my mind, that is not as likely as the market coming down here, dipping below that overnight low, and then continuing higher. Because of the gap up, the higher probability for today is that the market wants to go up. And what we are paying attention to is how long is that momentum, that gap up momentum, going to last? Is it just going to last for the first few hours and then we come back and fill the gap? Or can we keep the momentum going all day and keep the market trending higher? That's what we're trying to find out right now, based on whether we get a gap and go immediately or we fill the gap first and then go. So on the gap and go concept, now that we are above the opening price, so we opened and went up, okay? then came back down through the opening price. That's a little bit bearish to see. That triggers the market to start trying to fill the gap. The fact that we couldn't go down any further than that and came back up through the opening price again, that is a sign that this is what we now call a gap and go. The market officially has momentum to the upside this morning, and the target is the overnight high at 64.61. Okay? That momentum only lasts as long as the market stays above the opening price. One thing that the market loves to do is what we call a gap and chop, where it opens and it just kind of keeps going through that opening price again and 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 again, and just driving us absolutely nuts. So from this exact moment right now, if we stay above the opening price, it is bullish and we're heading higher. But if we start crossing through it again and again and again, then we know it's just a gap and chop and we need to wait for more information. So the question in my mind now is, can we turn 64.50 into support and hold it? If so, I'm bullish to get to 64.60. Let's see what happens. If you have not pressed the like button yet, the thumbs up button, I really would appreciate it if you'd be willing to push that button. I promise it's not going to hurt you at all. YouTube will not punish you for pushing that one little thumb, but it will help out the channel quite a bit in terms of the algorithm. Can I get a little thumb, just a little thumb in the chat now? A little thumb, then a little thumb. Good morning to Willie T. DNK in the house. He says we have a gap up and down. Yes, we have gapped up today inside yesterday's gap down. It's a gap and mess over here. And I do want to kind of jump into that topic in more detail, but let's just let the market kind of figure itself out for a little bit, and then we'll dive into that. Global trading, good morning to you. Will is here. Mark in the house. Welcome, welcome. Jay is here. Another day in the trading paradise at the big casino. Mike P., welcome to you. Sook is in the house. Grizzly Bull is here. Tom, welcome. Sniper Trader. Sheena. Mark. Jolts at 10 a.m. Jolts at 10 a.m. Got some numbers to look out for? Okay, so this is the moment of truth for the buyers. They do not want to pass through the opening price. If they do, it's a gap and chop. Can they hold it? Dun 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 dun. Man, they are dancing right on a razor's edge. Can they bounce up out of here and head to the overnight high? Or do we chop to the side? Good morning to Guillermo. Jay says that jolts might jolt the market. Nailed it. That'll get us a like for sure. Andrew in the house, good morning to you. Nicholas is here. 2:30, good morning. Lucas is with us. Sup? TF in the house, good morning to you. Okay, so we are getting support. I would describe myself as very cautiously bullish here. This doesn't feel like a gap and go. This feels like a gap and chop, but the technical signals are showing buying. That buying wants to fill the gap to 64.55 and then test the overnight high, 64.61. But they got to hold this support. So I would describe myself as very cautiously bullish right now. Here we go. Round 2. Testing the support. Can they hold it again? Okay, it is a gap and chop. Bummer. Okay. So this is actually better for the bulls in the long run, because if they got a straight up gap and go that immediately started, that would run out of steam and come back later on in the day. So they'd rather try to fill the gap right now, first thing in the day. So a little gap and chop is actually a good thing for the bulls. But it means we're not making a move right now. Probably making the move about 45 minutes from now. Okay, so that gives us some time to let the market kind of pass through the opening price again and 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 again here. So while that is happening, let's talk about something else that I feel like is a topic that we need to be talking about more. And I just am honestly not sure I have exactly the vocabulary to even have the conversation. So, as you all know, the system that I use for trading the market is what we call the auction process, right? The auction process is based on human beings and human psychology and the types of behaviors that we will tend to display based on what happens in our environment, right? We tend to react the same way to things. So if we can see what the thing is that's happening, we can predict what the reaction will be, what people will do as a reaction to that. And over the last few years, over the last 5 years or so, we've been talking more and more about this concept that I've been just calling chop zones, which is basically just when the market gets in a certain, it's not a range thing. It's not like a chop zone is like, you know, from here to here or something like that. A chop zone is more like a period of time, like for the next 2 weeks or for the next month or whatever it might be, we're in a chop zone. And when the market is in this chop zone, a lot of the things it does don't make any sense when you think about it in terms of, you know, human psychology and the way things tend to play out. A lot of the things that are traditional auction process types of analysis are just working less and less and less over time. And up till now, I've kind of been trying to differentiate between when are we in a chop zone? When are we in one of those time periods where things kind of happen in a much more random way? And when are we in a place where the market is moving in a much more normal sort of functional way? And I would say the last big rally from the lows, you know, looking at the long-term basis. So we're talking pretty much since like April. Okay. this market the whole time has felt like it is pinned to me. Every single move the market is doing, every single range that it finds itself in has always ended up feeling very unnatural. Like it doesn't really move the way you would expect human psychology to move. Everything is just really unusual. And as a matter of fact, just right now, looking at this chart, I could come up with 20 examples. Just looking, from basically April till now, what the market's been doing. There's just so many examples that are really weird. So I'm kind of coming to this realization that it's no longer, are we in a chop zone or not in a chop zone? We are just always in a chop zone. It is just that the markets nowadays, the mechanisms that make the market move are mostly machine driven. They're mostly algorithm driven. They are no longer based on human psychology. And so they're random. And we have to kind of just accept that like anything can happen. So I'm wondering if you guys in the chat have a way that I could describe the market and differentiate between times where the auction process plays out exactly the way we would expect, one thing after another, and times when the market is acting in this weird thing. So this morning, I came up with a phrase for it for the email that I sent out to the brigade members. I called it a high frequency bot driven market as opposed to an auction process driven market, because the high frequency bot driven market doesn't function like normal humans. So talking about normal humans, like a gap and go. If the market were to open this morning with a gap up and it were to immediately start to trade higher, the market should just go higher all day. Why? Because you got people that are short that have to cover, that pushes the market higher. And you got people that are flat that want to enter trades, that pushes the market higher because they're obviously going to want to chase price up if it's going up. And anyone that's long the market has no reason to take profits because we're going up. And so you've got no negative force pushing the market down, right? The market should, if you get a gap and go and the market starts to head higher, it should be able to just keep going all day. But what was my prediction in the email this morning to brigade members? That if we get a gap and go this morning that immediately starts to push higher, it's probably going to last about 1 hour. And then in the C period, maybe an hour and 20 minutes into the day, an hour and 30 minutes into the day, something like that, it'll reverse and it'll come back down to fill the gap. Why? It doesn't make any sense. At that moment, everyone should be going long. The market's open with a gap up and it's been going straight up for the first hour. Everybody should either be covering shorts or choosing to go long at that moment. But what will the market do instead? It'll reverse and come back down and fill the gap. Why will it happen like that? That is what we call bot shenanigans. It is just this mechanism that controls the market. And it has to do with options market makers who are now having to deal with 0-day options being the largest liquidity in the market. So the number one controlling thing that makes the market move from one day to the next right now is 0-day options. Whether those are 0-day options on individual stocks or on the indexes or on SPX or whatever it might be, the 0-day options, the options that expire at the close today, those are the main driving force of what the market will do today. So that's changed the mechanism quite a bit. And then also the high frequency bots, right? Which have been around for a long time, but again, are operating in much bigger size now than they ever have before. So much more of the liquidity that you see in the futures contracts is just bots. It's just quick day trading bots that are literally looking to make 2 points here, 4 points there, 6 points there. They're really quick little bots. And that has caused this bot shenanigans. It has caused this market to function in this weird way where even if you get a gap and go and you have momentum, you reverse and completely retrace it. And so yesterday was a perfect example. Okay, so for today, for right now, we are beginning to get a little momentum down. So what we want to see now is, can they turn the opening price into resistance? We are going to keep chopping through it. We're going to keep coming back to that opening price because it's a gap and chop. But can they now turn it into resistance and hold it? If they can turn it into resistance, then we get bearish for the gap fill. As of this moment, I don't think that's going to happen. I think we're going to pass through again and again. But if they turn it into resistance, we'll get bearish for that gap fill. Okay. But let's just take a second. Let's just rewind the clock back a whole 24 hours and let's talk about yesterday's range and what happens in yesterday's range. And like human psychology versus bots, right? What should happen? The market opened with this massive gap down, this big, huge gap down. The market opens. So at that moment, traders should either be thinking this move was wrong. You know, the market's not going to go down, in which case they are looking to buy dips that morning and then take the market back up to fill the gap, right? That's what should have happened. If traders were thinking that the dip was wrong, if they were thinking the gap down was wrong, they should have been looking to fill the gap. If they were thinking the gap was right, if they wanted to go with that momentum, the market should have continued lower, right? It's a simple concept. Either traders think it was right for dipping or not. And if they think it was right, they go short with the momentum. If they think it was wrong, they buy the dip to come back up. So what did the market do when it opened? Well, the first thing it did was it dipped. The first thing it did in the A period was it went lower. It got below that overnight low. And as I remember, there was even some new selling there, some business that took place there. So that was telling us what? The traders agreed with the gap. They were going with the momentum. Well, then what happened? Well, it reversed out of nowhere. The new selling just instantly disappeared. The market popped right back up through the opening price. And when it crossed through that opening price, what did it begin to do? It began momentum to the upside, right? Through the A and the B period. We just had lots and lots of momentum up. And so then you're saying, okay, well, what is happening? What are traders doing? Obviously, they bought the dip, right? They bought the look below and fail of that overnight low. That means they're bullish. They think the market is going to fill the gap. They don't think the market should go lower today. Well, then what does the market do? In the C period, it turns around and starts to create momentum lower. In the D period, it comes down and leaves behind a poor low. Now, I also need to mention, this is important nuance. When they created this high at the B period, they left behind a low volume node. The tick below the high of the day was a low volume node, and that's important because that's a magnet that was sitting there. Another reason why the market should have been able to keep going up in the C period, but it couldn't. Okay, anyway. So D period, we leave behind a poor low. So now we're saying to ourselves, okay, well, that's weird. You know, we were already, now we're down right here. We were already down here a couple of hours ago, and we had new sellers. Why the fuck are we back down here again? Why didn't we just go lower in the morning? If people thought the market should go lower, why didn't it just go lower straight away? Okay. So then you say, okay, whatever. We're going to start one time framing lower because we got the poor low. So we start one time framing lower. And how long does that last? That one time framing? Less than 30 minutes. Less than 30 minutes. The market actually gets to follow through on that new selling. What does it do? It creates a poor low. So bots artificially created a low there. The market turns around, and what does it do from there? Literally just momentum all the way back up to the high of the day. So you say to yourself, okay, whatever, Charles, no big deal. You knew you had the low volume node. You knew that there was a target up there. So once you got cessation of the trend here in the G period, it shouldn't have been that unreasonable to imagine that the market could come back to, backfill that low volume node. There's a 90% probability, 90+% probability that you're going to backfill that low volume node on the same day. So what's the big deal? Well, the big deal is that's fine. No problem. We come back up there and we take out that, we fill in that low volume node, but then we should have turned around and come back down. But that's not what we did. Instead, we poked up in the last minutes of the day and created a spike up. Why is that controversial? Because that's a sign the market wants to go up. It wants to go higher. So the market started the day with a sign it wanted to go lower. It tried to go lower and couldn't. It tried to reverse the momentum and couldn't. It tried to go lower and couldn't. It came back up again, and then it was able to break higher at the very close of the day. This right here used to never happen. If we could go back 5 years, the amount of times where you would get a gap down, then a trend down, and close with a spike up would have been literally 1 out of 100. It would have been extremely rare for that to happen, for the market to gap down with a large gap, one time frame, and then end at the high. That would be extremely rare. Even more rare than that would be something like this that opens with a freaking gap up the next day. A gap down one day, followed by a gap up the next day, makes no logical sense at all from a human being's perspective. Are people bearish or bullish right now? Do they think the market's going down or up? Why are they choosing to go long? Why are they choosing to go short? None of it really makes any sense. And all of it is perfectly explained if you just say the market is pinned. You just say every intraday move that the market is going to make today is not about where the market is going to end up. No matter what the market does, it's going to end up right here. It's going to end up back at the pin. But in between now and then, it'll do all sorts of crazy stuff, looking like it's going to go higher, looking like it's going to go lower. And it's always just going to end up back at the pin once again. And the intraday moves, no matter how bearish they may look, could totally reverse the next day and become something completely different. And that's why we keep having like a P-shaped day followed by a B-shaped day, or a gap down followed by a gap up, or a spike up that's followed by a day of, trending lower the next day, or whatever, because there is no system. There is no human psychology that is driving the trades that the market is doing. It is just bots. It is just these high frequency day trading bots and the arbitrage and the hedging of the options market that causes all these intraday moves. And none of it is really based on anything that you could track and predict, because both of those things are constantly changing. Every time somebody buys or sells a new options, the options market maker has to hedge or adjust their hedge, take it off, add to it, do this, do that. It's constantly changing. And every time the market does something weird, breaks a certain level, that change can suddenly cause a firing effect, where the firecracker effect, where the market bursts one way or another. You know what I mean? So if all of that is true, what is the word I use to describe the market? Because now it feels to me like the market is doing this bot shenanigans 95% of the time. And we get a normal day where the market functions as you would expect and everything plays out as you would expect it to 5% of the time. Now, here's where it's tricky. This is all still just as valuable, right? Looking at the auction process is still just as valuable today as it ever was. But the way you have to think about it today is you have to say what should happen with the auction process. And then if it doesn't, the exact opposite is going to happen. So I'm not suggesting we need to throw out the concept of the auction process. I'm not saying we stop assuming gaps are momentum, or we stop assuming spikes are momentum, because those things are still very powerful signals. We still are thinking that low volume nodes are going to get backfilled. We still are thinking that, POCs are going to get retested over and over again. So none of those concepts have stopped working, but you just have to be so much more fluid in saying, is it working the way it's supposed to, or are we in that bot shenanigan zone? So thoughts from the chat. How do I make sense of this randomness? Gap and chop continues. Watching for that resistance. And of course, there's an iceberg right there at 45. So we know we're coming back up to test that resistance. They're going to convince us to chase the short first, but then we'll come back up. One minute till those numbers. So we are expecting some volatility here. We are seeing that Bookmap is going dark. right? We see how the liquidity is beginning to disappear here. That is a sign that we will get some volatility at 10 a.m. Tom says, Charles's new course, How to Battle the Bots. Well, this is why I'm thinking about it, because I'm teaching a workshop next week and I'm working on the PowerPoints for it right now. And I'm trying to figure out, how do you teach people the when what should happens doesn't? How do you teach people that a gap down should lead to momentum down, but if it doesn't, it's going to reverse and head right back up? Like, how do you teach people to think that way? It's tough. It's easier to learn it the way I did in steps, but having to teach it all at once, it's tricky. Jay says the word is foobar. But I wouldn't say it's beyond recognition. You know what I mean? Okay, so do we get resistance? Again, this is just the reaction to the numbers, but do we get resistance here below the opening price? If they can turn this into resistance and hold it, we'll be looking for that gap fill. If not, the gap and chop will continue. Willie T says, say treat the market like you do any lady. I know what you mean. Ghost trader in the house. Good morning to you. Oh boy is here. Welcome, welcome. Andrew says, that's my issue, getting my head thinking the way the market is thinking. Yeah, like I said, for me nowadays, some of my best trades are when the market doesn't make sense. It's hard to explain. It's like, I'm convinced the market is going to do something. I'm convinced the market is going to, gap and go this morning. And then it doesn't, right? It comes down and it fills the gap and it starts to build up momentum and it looks like the market's going to go lower. And I'm like, oh, fuck, I should be bearish. And then out of nowhere, boop, it pops back up. And then I'm like, fuck yeah, go long right now. Because it may have looked bullish earlier in the morning, but that just got a bunch of people long to squeeze to fill the gap. They got bearish for a few minutes to get everyone short, but then as soon as they reverse, I know we're going to squeeze all these sellers, and that old momentum from the gap up is back in play. So I can get long right there, targeting a move to the overnight high, and that's the fucking trade. Now, could I predict that ahead of time? No, of course not. Like, that's too crazy. Too many things have to go wrong first for the setup to appear that tells you the great trade. But a lot of times, those are my best trades nowadays. It's like random thing happens, random thing happens, random thing happens. Ah, now I get it. And then great trade. And it's like, what is the word for that? Oh boy says, Charles, do you have a table of the percentages of things happening in regards to volume profile? So some of it you can find on Edgeful, but no. So the thing about the probabilities is there's too many factors that affect them. Okay. So take the probability of halfback acting as support or resistance, right? Let's say this little white line right here. And we want to know, how often does halfback hold as support or resistance? So if the market is coming up, does it stop price from going up and send it back down? Or if it's coming down, stop price from going down and send it back up, right? That's our question. Well, you're going to get totally different odds on a day where the market opens inside the previous day's range than you're going to get on a day where the market opens with a gap. You're going to get totally different odds on the days where the market opens with a large gap, like yesterday, as opposed to a normal size gap like today. You're going to get totally different odds if the last 3 days the market's been making bell-shaped curves and it's just been grinding in the same range as if over the last 3 days the market has been trending higher, right? And so every probability that we look at, it's not as simple as this thing happens this percentage of the time. It's like, what is the context of the situation? When the market is trending higher and you open, on a multi-day time frame, and you open with a gap up and that you get a gap and go, and then the market comes back down to the halfback, well, there's a very high probability that halfback will hold as support and the market will continue higher. Whereas if you've had 3 days where the market is in the same range and you're opening inside that range, there's an almost 0% chance the halfback is going to hold as support or resistance, right? You're going to pass through that thing 50 times this morning. So do I have like an exact matrix that shows in this market, there's this much of a percentage of this happening or that or the other? No, I don't have it on paper. But you know where I do have it? In my brain parts. After having spent years and years watching these mechanics take place over and over again, I just intuitively can sense how likely is halfback to hold as support or resistance today. How likely are we to retest the point of control? How likely are we to start one time framing lower versus one time framing higher? If we do start one time framing lower or one time framing higher, how likely are the odds that we'll keep going? So for example, yesterday, if we started one time framing higher in the morning, I would have trusted that one time framing much less. Why? Because we had a gap down, right? So probably the one time framing higher is just looking for resistance to continue lower. So I wouldn't trust that as much if we started one time framing yesterday to the upside. But what if we started one time framing today? What if the C period pokes? Well, then we got a gap and go. Now we're going with the momentum. So that's much more likely to keep going. I could trust that trend much more. So all of these odds that we talk about, these statistical probabilities, they have to be case by case dependent, right? Like, what is the market doing today? What did it do yesterday? What did it do the day before? By taking all of that information and chunking it together, that's how you kind of understand how things are likely to play out. And then always you have to have that when what should happens doesn't concept in mind. That if the market was going to fill the gap this morning, it should have just started to fill the gap, but it didn't. So that tells us we're going to gap and chop, or vice versa, right? You have to be able to know, even if the probabilities are telling you this thing should happen, if that's not how it follows through, that are the probabilities telling you the opposite. And if you can adjust constantly, all day, every day to those changes in real time, you can find lots of great trades. It just requires a lot more patience entering them. And it requires a lot more patience accepting when you get stopped out and you have to re-enter. But that's just the market that we have. I mean, that's just what you have to do. Talking about a gap and chop, baby. Mo says we could call it ordered chaos. Yeah, organized chaos. Maybe that's a good term, organized chaos. So like regular auction process versus organized chaos. I don't hate that, Mo. I'm going to think about that one for a little bit. Because there is chaos in it. There is randomness, but there is also pattern in the randomness. When it's the bots doing their thing, you treat it totally differently than when you think it's a natural auction process. So it is chaotic, but there is also, patterns in it that are recognizable and repeatable. Fighter Pilot in the house, he says, reinforcing what Charles is saying, odds are affected by auctions environment, imbalance, or in excess. Right. Yeah, so all of those things affect the percentages of a thing happening. You know, you can't say the market has a 20% chance it's going to trend higher because 20% of the days it trends higher. It's like, wait a second, but did we just break out of balance? You know what I mean? When you look at the day time frame chart, a trend higher on a day like this is completely different odds than a trend higher on a day like this. You know what I mean? In balance versus in excess. And so you've got to be able to understand constantly where are you in that auction process on the higher time frame to be able to have a statistical probability on the lower time frame. Oh boy says, sure thing. That means the table should be big. I suppose the way I would describe why I would never try to sit down and work out the probabilities on paper like that is I don't think it would be helpful. That was the biggest disappointment for me with Edgeful. You know what I mean? Was I thought like if somebody could finally go through and track these stats, how often does the market do this if it does that? How often does the market do that if it does this? Is I thought we would find lots of really interesting things. Ooh, 90% of the time this happens. 80% of the time this happens. Da-da-da. We'd have great setups. And it turns out the more data you look at, the more it just proves that everything is random. That almost every set of scenarios you look at, there's basically a 50-50 chance. It's like most stats fall somewhere between 40 and 60% probabilities. So almost everything in the market is 50-50. Pretty much anything can happen at any moment. That's the reality. That's what the data sets tell you. And that is not helpful in trading. So, yeah, that's why I never take the time to map it all out because it'll confuse my brain more. I know what works. I know what momentum looks like. I know what balance looks like. I know what an auction tapering off on one side and another looks like. That's my edge. And that always works. It just gets harder and harder with time. Because where you used to come down and find support and then turn around and head higher, now you started to come down, sweep the order books, then turn around and head higher. Then a couple years later, you start coming down, sweeping the order books, building up resistance, then turning around and coming back higher. And then a year after that, you start coming down, sweeping the order books, building resistance, getting one more push, then a complete reversal that comes higher. It's like how the things play out is getting trickier and trickier every year. But it's the same thing. Where does volume and time taper off? And so I don't want to get overly obsessive about this stuff in here. I want to stay focused on this right here. Where does the auction change? And if it starts changing in a different way this year than it used to last year, I just figure out what it's doing right now and I trade based on that. And I just every year adjust my strategy to the way things are working. But the concept is always the same. Where does the market run out of steam? Where is it balancing? Where does it have momentum? It's so choppy. There's no edge here. So I am feeling a bit of a gap fill here, but I'm not willing to short for it yet. just because of the way the market is moving in here. So what do we have on both sides of the market right now? A lot of icebergs on both sides of the market and a lot of stops on both sides of the market. So they're taking out shorts, they're taking out longs, they're taking out shorts, they're taking out longs, just over and over and over again. We also have this very quick pop higher in this area when the news came out at 10 a.m. and then the same move retracing it just now. So this might feel like they're building up momentum to fill the gap, but it is not confirmed to me yet. I got to see these ticks stay below the zero line to really trust this momentum down. Right now, my guess is we're going to come back to the opening price again. But if we can't and we get resistance first, then I'll get bearish. Oh, the shenanigans. Oh boy says, organized chaos like herding cows. Western style. Lots of noise, dust, etc. Not a clear direction at a point in time, but the cowboy always brings them home. I'll take it. Anything that makes me feel like my job is more masculine than just sitting behind a computer pushing buttons, I will take it. Yes, I'm a cowboy on the range. I'm just out here calling on my hush puppies to lasso my, whatever. The NK says, can we look at the NQ? The NQ is going up. ES is going down. The Google new got a lot of people stuck both ways. I assume you mean news. Was there news about Google? Did it have something to do with AI? Okay, NQ. See, no, I don't think NQ is going up, man. I think NQ is also in a gap and chop. It's a much larger range, but look, they got above the overnight high and they couldn't hold it. So that's bearish, not bullish. So they had the gap up. They got enough momentum to get to the overnight high. And then what happened to the momentum? It completely retraced. So that's a sign you don't have momentum. So I would say both markets are in a gap and chop right now. They're just going up to get people long, and then they come back down and they squeeze those longs. And then they go down to get people short, and then they come back up right now to squeeze those shorts. That's all that's happening. It's just chop. I don't see either market as having a clear edge one way or the other. Looking at the NQ, if they can get above that overnight high and turn that into support, so pretty much above the current high, 23 looks like about 460. If they can hold that as support, then you could get bullish for the gap and go. But right now, this reads to me as a gap and chop. It's exactly the same as the ES. Speaking of which, where's the ES? Back at the opening price. The chop will continue until morale improves. Andrew says, I'm still learning and I signed up for your course, but I do keep looking at VWAP setups that are not working for me. So we're going to go over all of that in the course next week. And, you're welcome to bring up those setups and we can talk about them one by one and kind of diagnose them and why they work or don't work. But the important thing to understand is individual trade setups. By trade setup, I mean a specific set of criteria that tells you enter this trade here, exit here. Okay. That's a setup. Trade setups are constantly changing. There is no such thing as one trade setup that will just work forever, right? That's not how it works with markets. And again, in the workshop, we're going to go into detail to explain the mechanics behind that, why it is impossible for the market to have any behavior that repeats itself for very long because people recognize it and start trading for it. So individual setups, they come and go. So what your goal is as a trader, and this is what you'll learn in the workshop, is to, instead of focusing on individual setups, focus on getting really good at reading the market. Get really good at understanding what the market is doing. Forget the lens of a specific setup. If it bounces off, the VWAP, one deviation, I put a short and I put my stop at 2 deviations or whatever it is, right? Forget about the specifics of the setup. Do you know how to tell if the market is going to go up or down? Do you know how to tell if it's going to be a choppy day or a strong trending day? Start with that. Then your discipline and your psychology. Get really, really good at managing your trades. So again, not specific trade setups. How do I enter? Where do I put my long? Where do I put my stop? But just managing trades. When do I enter? Why do I enter? How much am I risking in my trade? What are the rules that tell me I should or shouldn't be taking a trade? Forget what trade it is. Forget the actual setup. Should I be entering a trade right now or not? When you get all of that stuff figured out, you can read the market and you can manage your emotions really well. Developing setups, figuring out the specific ways to enter the trade, go long here, put my stop here, put my take profit here, that becomes much easier to do. And you're able to change as the market is constantly changing. So you may have a setup, a VWAP setup that's working great. And for 2 months, you make tons of money with that setup and you're fucking crushing it. And you're like, this setup is awesome. And then all of a sudden a week goes by and you lose money every time you trade that setup. And then 2 weeks go by and now you're like, what is going on? Well, if you already handled those first 2 things, if you're in control of reading the market and you're in control of your own psychology and how you trade, right? The mechanisms that get you to enter trades and not, you will have figured out before the 2 weeks of losing that something has changed. And your trading rules, your criteria would have told you to stop trading that setup. The 3rd time, the 4th time, the 5th time it didn't work, you would have said to yourself, I got to stop trading this setup. It's not working anymore. Then you would go into analyst mode and try to diagnose the problem. Why isn't this working anymore? And if the answer is the market just doesn't function like that anymore, you got to throw it away and start over from scratch, finding something new. If it is that the market has just changed slightly and you need to adjust it, well, then that becomes your thing. So one example of this, for years, my bread and butter setup, the setup that I made all my money on, like most of my profits came from this setup, was rotational markets. So the market would start trending a certain direction. It would get cessation. From that moment on, I would just layer in sell orders above the blue box, above the value area, and layer in buy orders below the blue box, below the value area, and then just put my take profits at the POC in the middle of the value area. And the market would push up and it'd fill 1 or 2 of my contracts and come down and take profits. And then I'd put new contracts in there and it would come up again and it'd fill 1 or 2 and come down and I'd take profits. And then it'd go down and it'd fill 1 or 2 of those and come back up and take profits. And then it would come back up and it would break through and start heading higher and I'd get stopped out 1 time. So I would have had like 4 or 5 profitable trades and then stopped out 1 trade. And it was so easy. It was such an easy setup. And I just kept doing it every day. Just layer in those orders above value, layer them in below value, and let it do its thing. But then what started to happen was I started getting stopped out all the time. I'd layer in those orders above and below value, and the market would come up, it would fill them, poke up and stop me out, then come back down. And so I didn't have to throw the whole thing away. I didn't have to stop trading rotation, but I had to adjust my setup. I had to say, okay, I can no longer just layer in, orders randomly above or below value. Now I need to watch the chart when it gets there and see if it's running out of steam. Is the tempo slowing? Is the volume fading? Does it seem like we're going to come back down? Then I enter the short. Or I wait for it to look above and fail. I wait for it to sweep the order books first, then I enter the short, right? And so that's all part of dealing with these constantly changing markets is even if you have a setup that works, it might just stop working one day. And maybe you need to completely get rid of that and stop trading rotation altogether. Or maybe you need to just adjust the strategy and wait for a look above and fail, or wait for the volume to taper off, or wait for a little more information to enter that trade at that particular level. And so that's what, in my opinion, trading is all about. It's about being able to adjust to those changes in market behaviors in real time. So that if you're making money off a setup for 2 months, you don't then lose money for 2 months before you figure out that it's not working anymore. You lose money for maybe a few days, and then you figure out it's not working anymore and you adjust. And if you can constantly do that, you make money for a month, you make money for 2 months, you lose money for a couple of days, you adjust. You make money for a month, you lose money for a few days, you adjust. You just keep doing that. After a few years, you will have all the setups you could possibly need. And it'll just be a matter of watching the market trade that day and figuring out which of your setups are best to trade that day. But of course, you're going to learn all of this next week in the Mastery of Markets and Minds workshop. Hope to see you there. Willie T says, lately I've been waiting for a sweep at support or resistance to see how the market reacts to that level. Right now, it appears to be targeting the gap fill. Well, I assume you wrote that like 20 minutes ago. But yes, so that is pretty much the same thing that I'm doing nowadays, is like, know where the sweeps are likely to happen. Be watching the chart closely at that area. Once the sweep happens, watch what happens next. So right now, where is that level? The poor high, the A and B period high. There's a very good chance in about 3 minutes when we print the C period, the C period is going to poke up and it's going to get above that A and B high. Why? Because it's a poor high. So it just increases the odds that the C period will get above there. Once it does, what happens next will be very revealing. We will either poke through and get a little pop, boop, 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 boop. That's the short covering. That's the stops getting taken out. And then we turn it into support, in which case we can be bullish. We're trending higher and we're in support. Or it'll do that, pop, 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 pop. It'll come back in and it won't find that support. In which place we're heading back down through the opening price and the chop will continue. So all I need to know right now is that there is a poor high. So that increases the odds that the market is going to get there, and that I want to watch what happens when we do to find out, do we sweep the order books and bring in new buyers, or do we sweep the order books and then fail? Can't predict ahead of time, but I can know what to watch for and then what to do based on what I see. I see that support. I see that new buying. I go long, targeting a move to the overnight high, or I go short, targeting a move back through the opening price if there is no support. Or if you really want to start playing 3D chess, it pushes up, it gets that support, you go long and you put a reversal trade at the low. So say you go long 2 contracts, you put 4 contracts short at your stop. So that if the trade works and it gets to that overnight high and you get filled, you take profits and you feel like the king of the world. And if it doesn't, you're in the short for the move back down through the opening price, which will then pay for your losses from your long. Ooh, now you're playing 3D chess. Now you're taking shit to the next level. marketsandmind.com. DNK says, yesterday my 30-minute rule paid off. I would have gone short yesterday at the high, but we got to go up, so went long and made it back. I'm a little bit confused. 30-minute rule. Do you mean at the end of the day you went long to carry it overnight? Is that what you're saying? So he talked about he's created a rule for himself where he never fights the 30-minute momentum. So if the last 30 minutes we made, lower lows and lower highs in this 30 minutes, he only goes long, or vice versa. He does not fight the 30-minute momentum. So I assume when you're talking about going long at the high, you mean at the end of the day. Because if you went long at the high in the B period, yesterday was a very uncomfortable day. It's so choppy. Yes, it's choppy. It is gap and chop for us today. So yeah, right now, nothing really looks bullish, but market generated information. We have a gap up. We have not filled that gap. So at any moment we're above the opening price. It is a gap and go. And we have a poor high in need of repair. So even though nothing really looks bullish right now, I think the higher probability is that we're going to start one time framing higher. And what happens next will tell us what to expect throughout the day. Tom says, feeling masculine? I wonder how the female traders are supposed to cope. I actually think women have an advantage in trading. I really do. They're generally more risk averse. So they don't like taking risks. They don't like to potentially lose money to enter the trade, but they are naturally much more cautious, which makes them more disciplined, which means they will have much less FOMO, much less forcing trades, much less chasing trades. It's just when they lose, it's much more painful than it is for man. But there's some killers out there that are women. Fighterpod says, times like that, best not to desperately be in need to make money and not mistake that by thinking you are out of the flow. I'm not sure which thing I was talking about that you're referencing, but that is one of the hard parts of trading. Is it's really hard to know, is my thing not working right now because something has changed with the market and my thing just doesn't work anymore? Or is it that my psychology is throwing me off? Is my problem with the chart or is my problem in my brain? That is a tricky one. And one that every trader has to struggle with every day, no matter what. It never goes away. I can tell you without a doubt, for me personally, if I'm not feeling well, if I didn't get a good night's sleep, if my back is sore, if I'm distracted because I have something coming up in a few hours that's more important to me than what I'm doing right now, anything like that, I will read the chart worse. You know what I mean? Like I will not have as much clarity in my reading. But it's not the market's fault. It's my fault. It's that distraction. Mo, you can just email me. Email me directly about it. Fighter Pilot says, after years of experience, discipline and procedures to be in the flow of the auction is the most important. Not knowing everything and being distracted by everything else. I agree. TF says, great session today. Not a lot of trades, but very educational. It's fun to be in the live sessions and what I learned in Markets and Mind. Well, thank you for the kind words. Fighter Pod says, not knowing everything is okay. Managing distractions is important. Yeah, definitely. That's a big part of the workshop is when you're confused, when you don't understand, the best thing to do is just don't trade. Just relax, get back to a calm state of mind, then sit down and start trading again. And things will suddenly start to make more sense. And if you have criteria that you use that tell you don't take trades when you're feeling confused, you will save yourself a lot of frustration. Sometimes the market doesn't make sense because of something going on with you psychologically. And sometimes the market just doesn't make sense. It's the truth. Sometimes the market is just fucking random and weird. And if you can, on those days, just do nothing, you'll be so much better off as a trader. It's when you try to force trades on those days where the market is being weird. That's where you get screwed. Willie T says the brigade is like a backfill, a necessary supplement to the course to reinforce what you already forgot. Again, with another nice review. Thank you, Willie T. Okay, so talking about this from the perspective of bot shenanigans, this actually feels bullish to me because they're creating an extremely weak high right now. Okay, the C period reversing exactly at the A and B period is to try to get people short with their stops above. Well, here we go. It's happening now. So that gives the market fuel to take out those stops. That's why they reverse at those exact levels over and over again. So now let's see how we handle this short covering. We are technically trending higher right now, which is the most bullish scenario you can get in a market. There is literally nothing more bullish than this. You got to spike up one day, followed by a gap up the next day, followed by a gap and go that is one time framing higher. So you don't get any more bullish a setup than this. So all we need now is to see support up here, to see new buying so that we can trust it. And in particular, I'd like to see those ticks stay above the zero line. Otherwise, shenanigans, organized chaos. I would describe myself bullish now as long as we stay above the C period low. Technically, the end of the trend is the low of the day, the B period low. But if this momentum is going to keep going, both now in the C period and when we print the D, they got to stay above this C period low. It's so choppy. Okay, NQ wants to stay above the overnight high, 23,460. As long as they can hold that as support, the NQ is bullish for continuation higher as well. I will admit this is very little short covering here, which is more bullish to see. I would have thought it'd be purely just taking out stops up here, but we're getting real buying. Okay. So there is the test of the overnight high. This is our next really important level for the market. So from here, either we keep the momentum going and we keep trending higher into the D period and beyond, or we start to run out of steam and come back down. So the fact that we got to the overnight high, to me now, I can only remain bullish as long as we are above the opening price. Because if we cross back through the opening price now, forget about the one time framing, okay, and just focus on it like this. If the market is going to keep going up, they should bring in buyers right here and keep going. If they turn around and come back through the open it is a sign we don't actually have momentum up, and that would increase the odds we're pulling back for a gap fill. So at this point, I am only bullish as long as we stay above the opening price, even in the D period. We also want these ticks to start to stay above the zero line. If this really is momentum, if we really are going to keep going all day, price should stay up here and ticks should stay above the zero. And that's how we'll know it's going to be a trend day. Okay, so my guess is that the D period is going to come back down to test this area around the A and B period high for support. But there is also a chance they turn the overnight high into support right here at like 64.60. So if they can turn the overnight high into support, the D period can immediately start to go higher. If they cannot, then they probably need to come back and test the A and B period high. But it is bullish right now. We are bringing in new buyers at the high. That is bullish to see. Doesn't mean we won't dip. It just means the dip will likely be bought. So I'm watching this overnight high right here at 64.60 to see if we get a bounce. If not, we look to test the A period high at 64.55. DNK says the problem is that the market is weird all the time nowadays. That is what I was talking about this morning when I was saying that using the term pinned market doesn't really seem right anymore because now it's pinned like 90% of the time. Literally, I would say, if you take any 10 days in a row of trading, you'll have like 9 days that are totally fucking weird and random thing after random thing keeps happening. Then you'll have like one day where everything plays out exactly as you would expect. So yeah, it's no longer that there are pinned markets. It is just markets, period. And so I find myself much more asking the question, not what would humans do at this level, but like if the bots were going to reverse here, what would it look like? How would they do that? What would be the things that would give me, an idea that this is totally going to randomly reverse and start trending lower, and it could happen right now. We could print a D and then immediately just right back down to the gap fill. And then, you would look at it after the fact and you would say it was a look above and fail the overnight high. You'd say the ticks were having a hard time staying above the zero line. You would see signs. But would I predict that that's going to happen right now? Of course not. The opposite. Right now, I'm predicting that the D period is going to continue the trend. Shenanigans. Good morning to Mr. Ree. Andrew says trading is like riding a bicycle with flat tires across an ice lake and staying upright. It does feel like that sometimes. Like you think I could learn to ride a bike. Riding a bike is not that hard. And then you're like, oh no, you got to ride the bike, but it's on ice. And you're like, oh shit. Okay. Well, that's hard, but I think I got it. And then you're like, yeah, but also you have to have flat tires. And then you're like, good God, man. That is trading. Willie T says it's amazing that after all the chaos, we are less than 100 points from a new all-time high on the S&P. We need a Trump bump to get us there. I would argue we don't even need a Trump bump. I would argue we're in balance and not necessarily the all-time high, but that direction is where we're going. So I see the market as being pinned. Basically right here. That's your pin. A little bit higher, actually, right there. And so it tries to go away. It comes back again. It tries to go away. It comes back again. Tries to go away. Comes back again. Tries to go away. Comes back again. Tries to go away. Today is the comes back again. Tomorrow will be the next try to go away. Will they go to new all-time highs or not? I have no idea. We'll have to wait and see. Fighter Pilot, thank you for the kind words. Appreciate you, brother. DNK says, is there anything to see in spot gamma? Nothing that's really jumping out at me. We are getting a lot more gamma above price than below. So if we just scroll back to 930, at the market open, we had this very large nodes just above price, but everything else is pretty thin. This is looking at the 0-day option, the 0-day data. But as we've progressed through the day, look at how much new liquidity starts to pop up here. How much new gamma. So that tells us that the strike price, 64.70, 64.75, 64.80, and 64.85 are in play for today. Again, it's all about momentum. Can we keep one time framing? But if we can, those are the targets to the upside, 64.70 on the SPX. And as we can see from the delta, once we get up there, not right now, but once we get up there, we start to get some resistance. We start to get some selling pressure. But in between now and there is nothing stopping us from continuing higher. So it is a matter of one time framing. How far can we push it? My guess, 64.75 as the upside target for today. That is the pin. And that's where I think we're going. So if they can hold the overnight high right now at 64.60 as support, or the base of the C period single prints at 64.54, I assume the next stop will be higher. It does feel like a very slow melt, so you don't have to chase, okay? You don't have to buy the high. Wait for dips. Buy where you can get in with a much tighter stop. Take on a lot less risk. But the momentum is up. And we just created a poor high, increasing the odds that once we dip, we'll come back for it. Also, real quick, while we see if we can hold 64.60 as support, or if we need to dip back down to 64.55, I just want to really quickly mention, for those of you that are just joining for the first time and you're maybe new to the channel, I have a workshop coming up called the Mastery of Markets and Minds Workshop. You can sign up by heading to marketsandmind.com. There's a link in the description of the YouTube video. But this workshop is not something I teach often. I only do it a couple times a year. This one coming up next week. It starts on Monday of next week. This is the last one I'll be doing for this year. So if you are interested in taking this, I highly recommend you sign up now. I will not be selling access to the course after the fact. So you have to sign up now before the course starts if you want access to the course. Okay. What I teach is basically my approach to trading. So I will teach you how I read the charts, how I enter trades, what are my risk management rules, what are my trading principles, everything about how I trade the markets. And that's great. And I hope it helps you. But what's really the value of the course is I teach you how to think for yourself. I teach you how to read the auction and hone your own intuition so that you get better and better every day, regardless of me, having nothing to do with me. I give you the process to go through to continually improve and get better and better results. We talk about learning how to manage risk. If you follow the risk management criteria that I give in the course, you literally can't blow up accounts. You're guaranteed to stay in the game year after year after year until you gain the skill to be able to pull profits out of the market. I teach you how to think in probabilities. This is the number one biggest thing holding people back. Human beings think like humans. To be a successful trader, you have to think in probabilities, which goes counterintuitive to your human psychology. You almost always have to do things that feel wrong in the moment that you're doing them. And if you can learn to think like that, you'll have an exponential change in your trading results. Okay? We talk about deepening your self-understanding and your market understanding. Being able to distinguish between why are you not profitable right now? What is stopping you? Is it that you don't have the right trade setups? Is it that you're executing the trades wrong? Is it something to do with your psychology? Is it something to do with the market? By being able to differentiate these things, you can have an edge. Not just tomorrow, not just next week, but for the rest of your life as a trader. That's what this course is all about. It's giving you the tools to be a trader, to learn to handle the business of trading. Okay? It's like going to a football camp if you want to be a football player. It doesn't guarantee that you're going to be successful. It doesn't guarantee that you're going to be profitable because you went to the football camp. Doesn't guarantee you're going to get into the NFL. But you got to go to the camp to learn how to do what you got to do first if you're ever going to be able to make it in the NFL. The same thing is true in trading. Okay? So I'll teach you everything you need to be successful. I will put you on the path to success. And then we'll hang out every day together in the brigade and chew mud, right? Chew cud. Just figure it out day by day, deal with what we have to deal with, but you need the base knowledge to make sense of it all. And that's what this course is all about. It costs $450. You can make that in 1 day of trading the ES. So if after 2 weeks of taking this course and let's say 6 months of your own personal development, you have even one big profitable day, you can pay for the cost of the course. But guess what you'll have after that? Another big profitable day and another profitable day and another profitable day. And 10 years from now, spending the $450 to buy the course will be a joke. It'll be nothing, a drop in the bucket. And so I highly recommend you sign up if you are thinking about doing so. Again, we start on Monday. So you got to sign up now. Head to marketsandmind.com. All right. So we are trending higher. We have a poor high still in need of repair. We are looking for support. And as I said, for the market to stay bullish, they got to stay above the opening price. If they cross back through 64.49, this market will sell off and go for a gap fill to the downside. So if the buyers, if the bulls want the market to keep going up today, they got to stay above that opening price. Any questions? Let me know in the chat. DNK says, I think we are getting into the options acceleration that Charles was talking about, where in spot gamma, where you see the options market makers going with price, pushing it further, right? He says, because on Bookmap, we're seeing new buyers. I would say in today's case, that is not what's going on. I would say what you're seeing up here in Bookmap is bots, is those day trading high frequency bots trying to get everyone long. Why? So they can sweep, take them out, and then go where they're going to go. That's what I think is happening right here. That acceleration of buying or selling is seen in the delta of the heat map on Trace. So if it is blue above price, that's acceleration, or red below price, that's acceleration. So when it's blue below price and red above, that's support and resistance. So right now, we got a little bit of blue, so we can get a little bit of a push, but it's nothing dramatic. Now, if this was blue and where we were right now was more reddish, then, oh yeah, that's where you would expect the market to start to take off to the upside. But that's not what we have today. Today, the way I read this trace is slow melt up. Probably heading to the strike price of 64.70 and no strong momentum. So just kind of slowly grind our way up there. Thank you, Tom. Appreciate you. Dan says, yo ho ho from the little dragon crew. Me hearties. I don't know who the dragon crew is, Dan, but we're happy to have you. Yo ho ho and a bottle of rum. That's from that old Disney ride. Dan says, only vodka and gin left over on this old boat? Well, then I'm the one that's sorry, Dan. I will not be partying with you. If that's the only option, gin and vodka? Thanks, but no thanks. Okay, so they could not hold the overnight high. So that means, first off, we're going to take out all the stops of anybody who's been going long at the high up here. Anyone that's been chasing price, gotcha. Took out one guy for 260 stops. Sucks to be you, bro. Take out those stops, but as long as there's buyers waiting, as long as there's support, the momentum should continue. So we are looking for that support at 64.55. Okay, moment of truth for the buyers. They want to flip those ticks back up, get back above the zero line, and take price back up above the overnight high if they want to remain in control here. The more time that we spend down here back inside the range, the less bullish it is. So the buyers really want to bounce up and out of here. They can either bounce right now or they can test the halfback around 64.50 and bounce there, but they need that bounce. And we will see it first in the ticks because the ticks will reverse and start to go up. So I am watching those ticks. No bounce at the base of the single prints. Less bullish to see. And you say, Charles, this is bearish. This feels like it's going to crash and burn. This doesn't feel bullish to me. I will tell you, the internals look bearish. Price action looks bullish. And it's times like this where anything can happen. If they do bounce here, they will shake off a lot of sellers that are entering right now. And so out of nowhere, we make our move. So I would be bullish as long as we're above the opening price, regardless of the bearish internals. Because all it takes is one little buyer and whoosh, this thing reverses right back up. Whereas if the sellers are going to take control, they're going to get the gap fill. They're going to head all the way for yesterday's high. And we don't need to worry about that right now because we can make our money as sellers, in the lower end of the range after we cross through the opening price, after we get cessation of the trend, then we can look to short for that gap fill. So right now, our focus should be on the long side. That's where the opportunity exists. And we're watching to see if those ticks can get above and stay above the zero line, and then price can get back above the overnight high. This is one of those things that I talk about, thinking in probabilities. It's very hard sometimes to think in probabilities. When it feels like the market is about to crash lower, to know that's the moment to get long. That's the moment where you have the least amount of risk, the best entry on your long. It's counterintuitive to what you emotionally feel in that moment, but that is the edge. Let's see what happens. All right, last chance for those buyers right here, right now. If this market crosses through the opening price, it will liquidate. Right here, right now, right here, right now. Hustling Forever says hello. Saw that you were online and stopped by to say what's up. What's up, Hustler Forever? Good to see you. James says following the trading bots is like following a Roomba vacuum as it explores a new room. I wouldn't go that extreme with it. That really is totally random. No, following the bots is about adjusting probabilities, how likely a thing is to happen. So, for example, we created this poor high here in the D period, right? Market starts to push away. My brain automatically goes, great, we're going to push away. We're going to find support. We're going to come back and repair it, right? That's normal auction process. That's what you'd expect. Today, what did my brain do? It goes, yeah, push away, come back, repair. But remember, we left behind a poor low yesterday and then just trended higher from there. So it's just a reminder that in the bot markets where things are being artificially controlled, a lot of the reversals for the day will be poor highs or lows. Speaking of which, they just lost me as a buyer. So now, just crossing through that opening price, that one little change completely flips how I see the day going today. Whereas before, I saw it as a gap and go, likely to head up to 64.75. The fact that we could not bring in those new buyers and keep that move going now tells me we're likely to come back for the gap fill. Now, before you go jumping into a short right this minute, I don't think it's going to happen instantly. I don't think we're going to literally liquidate straight into a gap fill now. I think we're going to chop more and more and more in here. But I think later on in the day, we're going to come down and fill this gap to the downside. Why? Because what should happens doesn't, right? We had a spike up followed by a gap up. That's the most bullish signal you can get and tells you should be able to get to the overnight high. No problem. Well, we did. We got there. New buying there tells you the market is going to keep going. We didn't get the new buying there. The end of the momentum, which was passing through the opening price today. Most days it's cessation of the trend, but today is passing through the opening price, is a sign that we're not going back up for those highs. So for now, for the next few hours, I assume we're going to go sideways in here, basically between the current B period low and the overnight high. We'll just chop around for a little bit, but I bet you later on in the day, they poke back down to fill that gap. And if you made me guess right now, I think we're probably going to close the market today right around where we opened, right around where we are right now. So I think we probably make a little trip to the downside that bounces, comes back up, and by the end of the day, we are right where we are as we speak. So then you say to me, well, Charles, what about the poor high? Right? You said that's a magnet. You said the market was going to come back and repair that poor high. And that is true. Believe me, it will. But it's not going to do it right now. It's not going to do it in the next few hours. First, it needs to dip lower before it comes back for this poor high. And the same thing is true for yesterday's poor low. Mark my words. I give you a 100% guarantee we will come back for 63.72. Not today, because we had the gap up. So we're not coming back for it today, maybe not even this week. But we will come back for it sooner or later. So when you leave a poor reference behind and then you completely reverse and start to trend the other way, you have to stop worrying about that poor reference. Let it go. Put it in the back of your mind for whenever you get momentum. So if today we'd have filled the gap, got new selling and started to sell off, then we'd be thinking about that poor low from yesterday. Right now at this moment, we're not thinking about it at all. That is the new position for the poor high of today. We're not thinking about it at all. We're focused on Do we get back in the gap? If we do we fill the gap, which we have a very high probability of doing? And what happens next? Do we get support? If we do, then the poor high is in play. Yeah, the move up was taking out sellers. The move down is taking out buyers. This is gap and chop. Any final questions for the pirate before I say goodbye for the day? Let me know in the chat. Hustler Forever says, I bailed on my short too early. I'll put it to you this way. Again, right now, for the next few hours, I think we're going sideways. I think we're probably going to just kind of chop around inside, the current range for a little bit. But if we get new selling below the B period low, 64.38, if we get new selling below there, there's an extremely high probability in the hours that follow that we will come back and fill the gap to 64.28. So that's a 9-point move right there. So you don't have to force your way back into a short up here. You can let it go sideways for a while. Let it break that low. Let it get that resistance, that confirmation of that new selling. Then you get short and you can make 9 points. And you don't have to guess right now that it's going to happen. You don't have to be able to predict the future. So there is definitely still opportunity to the downside. I just would not be entering that short right this minute. Let's take a look at the NQ. Yeah, NQ has been step by step moving exactly with the ES all day. That is another sign of pinned markets. So they literally backfilled the single prints in the C period at exactly the same moment. They failed the overnight high, and then they crossed back through the opening price all at the same time. So I think both markets are about to go sideways. 4 hours. Global says, can we look at the gamma levels? Let's do it. Yeah, so we've evaporated all the delta that was up there at those higher strike prices. So the market makers don't need to hedge those anymore, right? Because the market rolled over and it started momentum lower. So they don't need to hedge those. So that's gone. That's disappeared since last we looked at it. And we're starting to build some delta down here around 6,400. So that is now the target for the day to the downside. But that will also evaporate if we just keep going sideways up here. They won't need to hedge that anymore. Remember, these are 0 day. So as time passes, each 30 minutes or so that we get through the day, the delta is just automatically less and less and less because the risk comes off the table for the market makers. So I would say that confirms my thesis that we're going to go sideways for a few hours with the potential to break lower later on in the day. Somebody said yesterday that we tag the hedge wall every single day. I have not been monitoring that, but if that is something that you watch, that is at 64.20 on the SPX. All right. Well, it seems like that's it for the questions for today. Happy trading, everyone. As I said, bigger picture, I think the market is pinned. I think what we've got here is just a giant range that we're just playing back and forth in. Okay. So we're trying to take the market higher. We're bringing it back. We're trying to take it lower. We're bringing it back. We're trying to take it higher. We're bringing it back. We're trying to take it lower. We're bringing it back over and over again. As far as that is concerned, so we're talking bigger picture now, swing trade wise, the most likely thing is that we are heading higher. Okay. Heading back up towards the all-time highs. But I do feel we need to fill this gap from today first. It's a gap inside a gap. It's very gappy, right? It was a gap yesterday and a gap today. So that tells me that regular hours traders want to do business in there. So that's why I say I suspect sideways for a few hours, a poke down towards the end of the day. And as long as nothing exciting happens inside yesterday's range, I assume tomorrow we will make new highs and continue higher. Happy trading, and we will see you, if you're a member of the brigade, tomorrow morning. Sign up for the workshop.